Hi, I'm Shian Rashid, partner with SRJ Chartered Accountants, and today I'm joined by my colleague Craig Gibson from Scotiabank Healthcare Banking. This is part 3 of our video series for healthcare finance and accounting. Specifically, we're going to talk about how to streamline cash flow. So Craig, sometimes when we have a new associate or someone who's looking to start their own practice, there can be specific cash flow issues when they have, let's say, new staff they're bringing on, or they're looking to expand. What specific advice or products are available to these individuals to help them through this transition?
So usually when you have a brand new startup practice, cash flow is usually always tight for the first year or two. So we can provide them a credit line that they could use for their business. And that would be up to 25% of their annual billings. And that's done usually as part of the credit in the beginning when they get the loan for the purchase of the equipment, and done with the cash flow that their accountant helped them prepare. And also we provide them with a corporate credit card that they could use for making purchases, supplies and such. The other important thing to remember also is that as a new associate starting out in a new practice, it's always good to keep your previous job and keep working, so you at least have cash flow coming in to support your personal needs and things to pay for as you go along.
Okay, got it. And in terms of, let's say there's a big equipment purchase coming up, would you recommend paying that from cash within the corporation, or even obtaining finance for that? What are your recommendations?
We would always recommend anything large, any equipment purchases or any renovations, to always apply for a loan for that. Use your credit line strictly for cash flow items like rent, payroll, and day-to-day purchases, but put anything large onto a term loan and pay it over time.
Okay. I know when it comes to pulling out funds from the corporation for personal use for RSPs, we generally want our clients to plan in advance for that. We usually give them a salary schedule and a structure in terms of monthly what they should be withdrawing. Are there any other tools on the personal side that they would need, or RSP loans that you could also assist with?
We would, the one thing we come across a lot is trying to collect money quickly. Some offices have trouble getting money out of patients, so it's also important to get tools. For example, Chase Payment Tech, so you can get your payments right away in a fee-for-service office. And there's other ways that you could get your money faster. You could have a payroll service to pay your payroll, say, every 2 weeks instead of every week, to save money that way too.
Right. So are there any issues or hurdles you see, with the line of credits or with the way that it's being used?
Sometimes clients are using their lines of credit for personal use when they should be using it for practice or business use. If we've already given them an established line limit, once they reach that threshold, it is more difficult to get them an increase. And sometimes it's just maybe poor planning or poor cash flow budgeting. And if they were to speak to their accountant on a more frequent basis, or even have a bookkeeper in-house to help them with budgeting, that might make their cash flow smoother.
Yeah, it's a good point, because we see that as well, where it may come time to purchase a house, or let's say RSP time, and they want to pull out a significant amount and they haven't planned for that. So what we recommend always is budgeting on a monthly basis, let's say 3 months out, 6 months out, even 2 years out, so you know what your actuals are, and then comparing that on an annual basis or even on a monthly basis to ensure that if you've planned for a specific amount of business or revenue, to determine if that's come in. And then also from a higher level, to review monthly, annually with your accountant and bookkeeper to see what's going on. It's really going to help you grow the practice and then take it to the next level.
I would also add to that as a bank, we usually are always doing annual reviews. So each year we would come back to the client, ask them for their most recent financial statements, their tax returns, and that is kind of not a forward-looking document, but part of doing the review would be, how was last year? What do you think you're going to do for this year? And I'm sure you guys go through that with clients too, to say how the billings are going to grow and how things are going to move. Because chances are down the road they're going to want to buy more equipment, renovate, add more space. So it's usually a constantly living thing. It's always changing as they go. They just have to be maybe more involved day to day with their accountant's help as to how the practice is moving along.
Yeah, what we like to do is give them a compensation schedule at the start of the year, so they can plan what they need each month on a personal level, and then withdraw that from the corporation either through a salary or dividend. That way, at least they know exactly how much money is going to come out from a personal level, and they can plan and take into consideration, large purchases such as the house, vehicles, whatever it may be, and that way they don't get stuck with needing $40,000, $50,000, $60,000, $70,000 in one lump sum time. So for us, that's the most important cash flow tool, is making sure you're planning in advance, you're checking your budgets, or you're creating budgets even, because many people don't even create budgets,
Yeah.
and then checking that against actual. That's your number one tool against shortfalls in cash flow in any specific period. Yeah. Okay, that's great advice. I think that's a good basis for individuals and practices to start with. The one area we haven't discussed is more established practices and what they need to plan for. Do you have any advice there in terms of what they should be looking out for?
I think they have a lot of the same maybe day-to-day issues as a small practice or a startup practice. It's mostly about budgeting and managing the cash flow. With a credit line, you could use that money for anything you want to, but we also try to educate the clients by saying to them, use your credit line for cash flow needs. Rent, staffing, day-to-day things, emergencies, maybe set aside 10% of the limit for an emergency-only basis. And anything large or anything predictable, say expanding your practice, put that onto a term loan. When you have multiple practices, sometimes you have multiple credit lines and multiple loans. So clients do have the ability to move money from practice A to practice B, so they do have a bit more freedom. If you just have one practice, you can't do that. So maybe they'll go work as an associate for a couple of days a week to provide more avenues of income. Sometimes even if you own a practice, you could work at another practice a day or two a week part-time to pick up additional income that way.
Yeah. All right, thank you, Craig, for the great advice. If you have more questions, you can reach out directly to Craig at Scotiabank Healthcare Banking, or if you want any advice on tax or straightening up your structures, reach out to us at SRJ Chartered Accountants. If you want access to all the videos in this series, you can go to srjca.com/healthcare. Stay tuned for our last video in this series about whether you should buy or build a new practice.